We can present many categories of flows and stock positions on a gross or a net basis. The choice depends on the category of flows or stock positions, the nature of the items that might be subtracted to obtain the net value, and the analytic usefulness of the gross and net values. For both assets and liabilities, a positive change indicates an increase in stock positions, and a negative change indicates a decrease in stock positions. All balancing items also involve netting in the sense that one category or aggregate is subtracted from another. Netting is implicit in various transaction categories. The most common example is changes in inventories. The net changes in inventories underlines the analytically significant aspect of the overall capital formation rather than tracking daily additions and withdrawals. Similarly, with a few exceptions, the financial account and other changes in volume account record the changes in assets and liabilities on a net basis. This is done to bring out the final consequences of these types of flows at the end of the accounting or reporting period, rather than monitoring the increases and decreases separately. Net recording of transactions in financial assets and liabilities is done from both an analytic and a pragmatic perspective. By net recording, we mean that aggregations or combinations show the net changes, that is, increases minus decreases, or acquisitions minus disposals, in a particular financial asset or liability category on the same side of the balance sheet. However, changes in a specific category of financial assets should not be netted against changes in a specific category of liabilities, except in the case of some financial derivative instruments. We record transactions in non-financial assets, financial assets, and liabilities as net changes in non-financial assets, net changes in financial assets, and net changes in liabilities, respectively. The net recording principle should be applied at the lowest level of classification as applicable. Generally, we can say that we apply the net recording principle within a given standard component of assets and liabilities. Other economic flows in assets and liabilities are also presented on a net basis. This means we present the net holding gain or net revaluation for each asset and each liability, not gross holding gains and gross holding losses separately. Similarly, other changes in the volume of assets and liabilities are presented net, rather than recording increases and decreases in volume changes separately on a gross basis. For both financial assets and liabilities, we present stock positions held for the same type of financial instrument on a gross basis. For example, a government unit's holding of debt securities as financial assets is presented separately from its liabilities for debt securities issued. However, the holdings of debt securities are presented on a net basis as acquisitions of debt securities minus the disposals of debt securities, and so on. To avoid confusion, macroeconomic statistics use the words gross and net in a very restrictive sense. Apart from a few headings, for example, net premiums, net worth, net changes, and net lending or net borrowing, the macroeconomic statistical classifications employ the word net exclusively to indicate the value of non-financial assets after deduction of consumption of fixed capital, which is basically the macroeconomic version of depreciation. Consolidation is a special kind of cancelling out of flows and stock positions within a group of units that are combined. This should not be confused with the concept of netting.